Good morning and welcome to the day ahead. It's the 13th of July. I'm Nadine Blaney. Well, U.S. stocks were sold off and bond yields dipped, with the U.S. 210 yield curve posting the largest inversion since at least 2010 in the overnight session. By the end, all three major U.S. stock indices seesawed between modest gains and losses earlier in the session, but as you can see, were lower and turned sharply lower late in the day as that inflation report looms. More on that later. Investors continue to worry about the U.S. tipping into recession as the U.S. Fed tightens monetary policy aggressively. The U.S. dollar roared to two-decade highs against multiple currencies, while the euro was trashed, coming within a whisker of parity with the dollar, though it did bounce off those lows. Also a growing concern, a number of Chinese cities, including Shanghai, are adopting fresh COVID-19 curbs. Oil prices fell sharply overnight, with Brent crude settling below $100 per barrel, pressured by that strong U.S. dollar and worries of demand destruction. OPEC also said it sees lower 2023 oil demand growth and no big gain in U.S. shale production on the horizon. Gold was steady, with spot prices at $1,725 per ounce, iron ore at $108 per wet metric ton, and copper was down 3.1%. Cryptocurrency prices were under pressure, with Bitcoin falling below 20,000. That June CPI report, the inflation read, is expected to show inflation continued to rise in the month, but core CPI, which strips away food and energy prices, is expected to show that inflation has peaked. Last night in the U.S., the NFIB Small Business Sentiment Index dropped near 9.5-year lows in the month of June. Commentary from the U.S. Fed is still very much in focus, with Richmond Federal Reserve President Thomas Barkin saying he's definitely seeing signs of softening in the economy, but warns that inflation will come down only gradually. Meantime, the Bank of England's Governor Andrew Bailey says the independence of the central bank will be put to the test as it looks to bring inflation back down to its 2% target. The BOE has raised interest rates 5 times since December, with Bailey also saying in a speech the bank would act forcefully if necessary. And in Germany, investor sentiment tumbled in July, hitting an 11-year low. On the earnings front, PepsiCo raised its full-year revenue forecast and said it could continue to increase prices after seeing little impact on demand for its sodas and its snacks, despite decades-high inflation. Meantime, shares in Boeing jumped 7.4% after the plane maker's June aircraft deliveries hit the highest monthly level since March 2019. Gap shares fell 5% after its CEO stepped down and said that margins would remain under pressure in the second quarter due to input costs. Meantime, in other corporate news, Tesla is laying off 229 employees at its office in San Mateo, California, and says it will permanently shut the office. And Peloton Interactive says it will stop all in-house production of its bikes and treadmills and move manufacturing to partners in an effort to simplify its operations and reduce costs. Locally, we'll be watching South 32 shares. It sold off a portfolio of royalties over advanced development stage copper and nickel projects to Anglo Pacific for $185 million US, with a further contingent consideration of up to $15 million US dollars. And Neo Metals will be in focus after its lithium-ion battery recycling joint venture Primobios has secured an order from Mercedes-Benz's recycling subsidiary for an integrated recycling plant. Neo Metals says Primobios will continue and complete front-end engineering for the shredding section of the recycling plant. Well, yesterday here in Australia was yet another underwhelming day. Tuesday, the local market saw defensive sectors, healthcare, consumer staples, and utilities rising, while materials, tech, and communications were lower. Today, the SPI futures are pointing to a very flat open here in Australia. Well, that does it for the day ahead. I'm Nadine Blaney. We'll see you tomorrow.